Hey everyone, it is Julie here with TipRanks, and today we're taking a look at recent buy ratings from a top 1% analyst. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. TipRanks is well known for tracking and ranking Wall Street analysts. By looking at their past performance and success rates, we can help bring transparency to Wall Street and help you know who to trust. That is why I love looking at the top analyst page when I'm looking for new stock inspiration. If we head over to the top analyst section on TipRanks, we'll get a list of the top 100 ranked analysts here. Now today, we're taking a look at Christopher Rolland from Susquehanna. He is a 5-star analyst and has an average success rate of 71% over the last 2 years and an average return of over 42%. And just yesterday, Christopher reiterated buy ratings on a handful of technology stocks. So we're going to take a look at a few of these companies, what it is that they do, and how the rest of Wall Street weighs in on them as well. We'll be kicking things off with a company called Synaptics. They trade under the ticker SYNA and are currently priced just above $100 per share. Now, overall, in the past year, they are down 11%, but have been seeing growth in the past 6 months, growing 11.2%. Synaptics combines IoT and AI with human interface technologies. They help users get the most out of their devices through an extensive portfolio of human interface solutions. They're the company that invented the computer touchpad, the click wheel on the classic iPod, Android phones' touch sensors, and fingerprint sensors. They have a broad portfolio of touch, display, biometrics, voice, and audio products. Their most recent quarterly report came out near the start of November, where they saw both an earnings and revenue beat, and management made commentary towards some stabilizing trends. Their Q2 report will be coming out in just a couple of weeks on February 1st. For their Q1, they reported earnings per share of 52 cents, coming in comfortably ahead of expectations, and revenue came in at $237.7 million. Their CEO said that they saw revenue increase on a sequential basis for the first time in over a year, and that they're starting to see stabilization in our business and expect recovery in calendar 2024 while they continue to work through excess customer inventories. Of course, we know our top analyst Christopher does rate the stock a buy, but also weighing in the stock last month is an analyst who just initiated coverage from JP Morgan. Weighing in on the stock was Peter Peng, who said that Synaptics is emerging as a strong player in the high-performance segment of the Internet of Things market, led by their best-in-class Wi-Fi Bluetooth combo technology. The firm says that the company is leveraging their core technology to move into the broad segment of the IoT market for further market share gain. With 10 current analyst ratings, the Synaptics stock does come in as a strong buy, with 8 buy ratings and 2 holds. Their average price target comes in at $118 for an upside potential of 18%. Our most recent rating here is Christopher from Susquehanna. His price target of $125 would be an upside of 24%. And there are several ratings in that double-digit range. On the low end, we do have a buy rating with an upside of 4.5%, and our high-end price target is an upside of 29%. Our second tech stock to recently get a buy rating from Christopher is Marvell. They trade under the ticker MRVL, currently priced at about $64 per share. Now, they shot up here back in May and overall are up 58% in the past year, though in the last 6 months they did slide a bit down a couple percent. They've been climbing back strongly, gaining 24% in the last 3 months. Marvell offers a broad and innovative portfolio of semiconductor solutions. They are a singular player in developing technologies for accelerated compute, optical connectivity, networking, storage, and semiconductor design to expand the reach of artificial intelligence. As the semiconductor industry's only data infrastructure specialist, Marvell partners with its customers and the open ecosystem to move, process, store, and secure the world's data-transforming data center, automotive, enterprise, and carrier architectures for the better. Though revenues did decline a bit year over year, they did come out with both an earnings and revenue beat in their third quarter report near the end of November. They reported earnings per share of 41 cents, coming in just 1 cent ahead of analyst expectations, which is what they did in the last quarter as well, and revenue came in at $1.42 billion, just ahead of expectations. That revenue did decline 8% year over year, however. But management said that they do expect growth of over 30% sequentially for their fourth quarter, and that the diversification of their portfolio is serving them well, with strong growth from AI and cloud carrying them through a softening demand environment in other end markets. In just the past few days, we've had several analysts raise their price targets on the stock. This includes one analyst from Barclays. They raised their price target to $75 when they rolled out their 2025 numbers across the semiconductor and semi-cap equipment space. They prefer names levered to the second wave of artificial intelligence. Marvell has attracted 25 current Wall Street ratings and is almost a unanimous buy with 24 buy ratings and just one hold. The average price target for the stock comes in at $71, which would be an upside potential of 11% from current prices. Down here, we can see our top 1% analyst, Christopher Rolland, rates the stock a buy with a price target of $80. That would be an upside potential of 25% and is one of our higher end price targets on the stock. We have a couple at that 25% mark. Going back a bit further, near the start of December actually is where we have our low end price targets. Some buys with downsides of 6% as the stock has already surpassed those targets. And our third stock, picking up a recent rating from our top analyst, is Analog Devices. They trade under the ticker ADI, currently priced at $183 per share. Overall, the past year, they're up 12.8%. They took a big dip down here at the end of October, but have been climbing up steadily since, seeing gains of over 7%. Analog Devices is a chip company in the signal processing and data conversion segment. Their product portfolio includes a wide range of chipsets used in applications as varied as motor and motion control, power monitoring, clocks and timing devices, amplifiers, switches and multiplexes, and industrial Ethernet solutions. They did come out with a revenue beat for their Q4, however, earnings per share did fall ever so slightly short. They reported revenue of $2.72 billion, beating expectations, while earnings per share of $2.01 fell 1 cent short of expectations. The company said that their revenue saw double-digit year-over-year growth in automotive, and their fiscal 2023 revenue of $12.3 billion was driven by new records in both industrial and automotive. They said that long-term, the opportunities ahead for ADI remain strongly positive. Our product portfolio is designed to take advantage of numerous secular trends. Our opportunity pipeline is robust and expanding, and our commitment to strategic investment in innovation, customer engagement, and supply resiliency remains undeterred. Analysts are a bit more divided on Analog Devices. They do have 20 current analyst ratings, but come in as a moderate buy, with 13 buy ratings and 7 holds. The average price target for the stock comes in just shy of $205 for about an 11.5% upside. Down below, our top analyst here, Christopher Rolland, rates the stock a buy with a price target of $220, which would be an upside of 19.7%. Once again, we have a couple ratings around that price target. On the high end, we do have another up above 22% here from Truist Financial. Going back a bit further, one of our holds is a low-end price target with a downside of over 4%. So that is a quick look at 3 tech stocks recently picking up buy ratings from a top 1% analyst. Let me know your thoughts on these 3 companies in the comments down below. I always appreciate hearing from you guys. And of course, please remember these videos are never a suggestion to buy or sell any specific stock. Please make sure you always stick to your own investment plan. Thank you guys so much for watching. Have a wonderful day, and I'll see you back here next time.